All right, I think we're live here. Just making sure. Give a couple minutes for people to join in here. Hopefully everyone is having a good Wednesday. Looks like we're live on YouTube, live on Facebook. Thank you, Brian. Hey, Kareem. Awesome. Thank you, Becky. She says, we've been missed. So, yeah, back again. I think we'll keep on doing these until there's hopefully no more news to talk about, which is hopefully sooner rather than later. For those of you that have been around since the early ones, you'll notice that I have still not got a haircut. So hopefully we'll be able to get that open back up here soon. For the next one, and I will have, shorter hair. I don't think that my hair has been this long since high school. So hoping that gets taken care of sooner rather than later. So like I said, hopefully everyone here is having a good day. Hopefully everyone here is enjoying. Been talking to a lot of shop owners, and people have been saying that business has been starting to really pick back up. A lot of that I think is state by state dependent. I know, depending on what state you're in, people down in Texas, people down in Florida, open on the beaches, doing whatever you want to do. We still have a lot of states out there that are completely closed down. But, from the most part, what I've been seeing is that, business has been starting to pick back up. Business has been starting to merit bringing people back to payroll, even if it wasn't for the PPP. Just kind of keep on hoping that we get some positive news here. Stuff is moving in a positive direction, and that we don't get any more bad news, which I guess kind of leads us to why we're here today is, we've been getting some more news, since the last time we talked. We've got the new PPP forgiveness application that came through. So I want to touch on that pretty quickly. And then just kind of give a quick update on where everyone stands. For a lot of people, you're about halfway through, maybe 3/4 of the way through on the PPP. So we want to just make sure that we're tracking stuff, making sure that we're getting the forgiveness. And then we'll kind of touch on the EIDL loan at the end here as well. And then I want to open up a little bit for questions. John asked if you can get a Parmelis shirt. John, we can see if we can work that out for you. Cool. So the first thing that I want to start on is a couple things that have came out since the last time we did one of these. If you remember when we initially talked about this, one of the things that was the big question was, is this going to be taxable income when they forgive this loan? And the Treasury came out and they said, this will not be taxable income. If you get a $100,000 PPP loan and it gets forgiven, you will not pay tax on that $100,000. That was from the Treasury. The Treasury is who made this bill, who's handling all the money. And then what ends up happening is that they came back, or the IRS came out and said that, while the forgiveness itself is not going to be taxable, that you're not allowed to use those deductions on your income taxes. So essentially a bit of a shell game here. So what they're saying is they agree with the Treasury that it's not going to be taxable on the forgiveness side of it, but then correspondingly, we're not going to be able to deduct any of these payroll, rent, and utilities expenses that we're using towards the PPP. If you kind of follow the math there, they're essentially saying that, yes, it is going to be taxable income to you. A lot of people have been kind of, I would say freaking out about this, right? Because we were under the impression this is not going to be taxable income, and now it is going to be taxable income. But if you step back and think about it, the argument is, first and foremost, I want this to be non-taxable, right? No one wants to pay tax. So if we can get this to be non-taxable, then great. But if you think about it, essentially, the government is giving us money. We're able to use this however we see fit. If that portion is not going to be taxable, does it really make sense for us to then turn around and use that money to get a deduction for it? I mean, if you think about it in, an extreme scenario, let's say that we got $100,000 and I went and I used that $100,000 and I used it to pay people for payroll. That money would, then be a deduction for me as well. And so rough numbers, that $100,000 would give me like a $20,000 tax break. For a lot of people, that didn't seem to make a whole lot of sense. Now, I know that there's some people out there thinking right now, well, if I didn't get the PPP loan, I probably would not have brought these employees back, so I wouldn't have been paying them. But there's a lot of people out there that, are still making money and are still having these employees on there no matter what. So it's kind of a tricky situation. As far as that goes, right now it is taxable income. So right now, essentially, if you got a $100,000 PPP loan, the way to think about that is instead of them giving us a loan, they really gave you sales. And so just like if you had someone came in that you sold a $100,000 job, you'd obviously be expected to pay tax on that. It's essentially the way that the PPP is getting treated right now for income tax purposes. Now, one of the things that's going through the Senate, I'm not sure if it's in the Senate or the House, but I know that they've been talking about this, is there's a couple senators that have been trying to clarify this to say, hey, we do not want this to be taxable income. So that's something we're going to keep an eye on, because just like this entire process, nothing is going to stay the same. It's went from non-taxable, now it's a taxable. And what we're looking out for is we'll see if they then change that around again. And by the end of all this, it's back to not being taxable income. As far as what you need to do right now on that, as far as tax planning, I don't think that there's anything urgent to do right now, because nothing has changed as far as what we're doing with our cash. And so I'm still maintaining cash as much as I can, because at the end of the day, cash is king. Doesn't matter how much profit you had before this, it matters how much cash you had. And so I'm not going to be blowing through that money. I'm going to be having that money sit aside. But really what I would want shops to be doing is talk to your accountant. Make sure that this is on the radar. Make sure that your accountant is aware that this is going to be taxable income, because we don't want to find out what the burden of that is going to be come next April, right? We need to be talking about that real time this year when we still have stuff to do or still have time to do it. For all of our shops that we work with, we're going to be doing tax planning for them June, July, August, September, to make sure, to see where we stand. Are we on track for this? Let's say a situation where if you had a shop and you were down, maybe to 25% of what you were doing before, maybe this taxability thing has no effect on you. Because while, you got a $100,000 PPP that's going to be taxable income, you were down, $125,000 in total sales based on what you did last year. If that's the case, you probably won't really see much effect of this taxability in your bottom line. But again, this is just something to stay on top of this. This is something that you need to make sure that you're talking to your accountant with. A lot of stuff that I'm going to be going through here is going to be broad strokes, right? And so if you have a specific situation that's going to be a little bit more in depth, reach out to the professionals that you work with. I can kind of speak in broad strokes of what works for most businesses, but every business is a little bit different. What works for me might not work for you. And the same flip side, a lot of shop owners, I love this community. I love how much people talk and share. But unfortunately, I've seen a lot of people saying, well, hey, they said to do this. And it's like, well, that probably worked for them, but it doesn't really work in your situation, or maybe it's not even allowed in your situation. So again, we'll keep an eye on it. Just want to kind of give an update on where that stands right now. So I see some questions coming through right now. What I'm going to try to do is kind of hit the things that I want to talk about, and then I'm going to open it up to later. So you're more than welcome to share your questions right now. It's honestly just too much for me to try to do this and try and follow your questions at the same time. So if you have something, save it till the end here when I open up for a question. That way we don't get kind of lost in the shuffle here. All right. So this kind of brings us to the next question, or kind of the next topic of what should we be doing now, right? For those of you that are halfway through, 3/4 of the way through, what should you be doing right now? First and foremost, you should know where you stand. You should be tracking this. In the previous webinars, we gave out a Excel spreadsheet that pretty simply tracks where you stand and where you're going to be. And so if I'm 4 weeks into this and I got $80,000 on the PPP, I want to see that I've used about $40,000 of that forgiveness money. If I'm at $40,000, $45,000, then to me, that says that I'm on the right track here. I've been spending the right things. I've been doing the right stuff. I just need to make sure that I just maintain this course and keep on spending the way that I've been spending through the end of this. Now, if I'm short, if I'm looking at this and I say, hey, I'm coming up really short on this, this would be time where you need to reach out to your accountant and say, hey, what can I do to maximize this, right? It depends on how aggressive we want to get on this, right? We can talk about increasing our own salary. We can talk about hiring our spouse. If your spouse works in a business and doesn't take a paycheck, hey, maybe it's time to bring them onto payroll. Talk about maybe, for those of you that have flat rate technicians, I know a lot of my shops out there have been increasing their minimums or increasing their guarantees to get them some money. At the end of the day, we want to be productive in the way that we spend this money. At the end of all this, so let's say that you do get that $80,000 PPP and you don't spend 10,000 of it. Is that the worst thing that you have $10,000 left over? Not necessarily, right? I don't want to throw money out there just to spend it. I don't think that that is an effective way to do it. There's ways that we can be aggressive and there's ways that we can plan on it and how to use it effectively, but I'm not spending this money just to spend it. At the end of all of this, let's say that you have $10,000 left over. You have two choices. You can either give the bank back their $10,000 or you can keep that $10,000 and you pay it back over 18 months at 1% interest. Whatever way you look at it, it's pretty cheap money. So who would be in a situation that would pay it back and who would keep it? If I get $10,000 that I can keep at 18 or over 18 months at 1%, I'm probably going to hold on to it. The reason that I say that is we'll kind of get into this when I talk about the EIDL a little bit later as well, is we don't know what's going to go on right now, right? We are in the early stages, even for the states that are opening up, we're in the early stages of opening back up this country. And we're really at the mercy of the politicians on what they decide to do. You could be looking at all the statistics that you want. You could be looking at all the experts in the forecast, but really it comes down to what the government decides to do. And if you're in Tennessee, that might be different from what they decide to do in Michigan. And so the reason that I'm probably saying, hey, I wouldn't be so quick to try and spend all this money or just give the money back to the bank once we get to the end of this, because what happens if we do have another shutdown? What happens if they come back on some of the openings that they've done and they say, hey, you know what? The numbers aren't what we want them to be, and we're going to have to shut this down again. I want to make sure that I'm in the proper position, proper cash position that I can get through that. If I need to have that money sitting in my bank, $10,000 over 18 months, I mean, $10,000 at 1% is going to cost you $100 a year. That's pretty cheap money to be able to set aside to have good peace of mind. Now, if you just have if you already have excessive cash reserves, if you already have tons of money and you really just want to be done with the bank, then fine, pay them their money back, be done with it. But at the end of the day, I just don't want people to be, super Dave Ramsey on this, that no debt is good. You have to be completely debt free. Really, at a time like this, we need cash, and we need cash in our accounts. All right, so something to keep in mind about that. So let's talk about what else we should be doing. So we're tracking this on our spreadsheet, right? We're making sure that we're spending the money, making sure that we're on the right track. At the same time, we need to be having good record keeping. For those of you that have seen the forgiveness application documents, it's pretty in-depth on what they want for record keeping, right? For the payroll records, that might be the easiest one of all that, because no matter who you do payroll with, they have payroll reports that you can do. But we want to make sure that we're keeping all those records, keeping all the payroll reports on a weekly basis, keeping a copy of those canceled checks for the rent, keeping a copy of the canceled checks or the bill statements for the utilities, making sure that we have all this documentation along the way. Because just like with your accounting, is it easier to keep up with that stuff on a daily or weekly basis, or to get behind on that 2 months and have a monstrous project on your lap? Let's make sure that whatever we're doing, we're keeping good records of it, we're keeping track of it, so that when it does come time for forgiveness, we don't have this massive project in front of us. We just say, all right, we've been counting these records, we've been having this already. Here's my folder, I'm going to give it to my bank. Let's kind of quickly go into a couple of different things on what we can make sure that we're doing. Really, we're going to get three major categories here. We got payroll, we got rent, and we got utilities. And so payroll, it's pretty straightforward on that. All payroll, it's going to be gross wages plus state unemployment is lumped into one bucket here. And so it doesn't matter if it's bonus, doesn't matter if it's commission, doesn't matter if it's flat rate, whatever it is, it's all lumped into one bucket. Okay. I had a good question from one of our clients before of, let's say that you are a corporation and you didn't take any payroll last year. Am I allowed to take payroll this year? Yes. Right. And so if you're actively working in the business and you chose to not take payroll before, for whatever reason, you are 100% eligible to go on payroll right now. Nothing against that. Now, a question about, hey, bringing kids, bringing spouses on here, we're definitely getting into a gray area. Let's say that you do have a spouse, whether it's your husband, your wife, that works in the business that wasn't getting paid before. Really, the thing that if anyone was to look at this, you're going to have to substantiate is what were they doing to earn the pay that they got? Now, at the end of the day, I think that there's a pretty low chance that any of this stuff really gets looked into with any sort of detail for small businesses like that we have here on this call. But we want to make sure that we have a defensible position, right? I mean, if you wanted to, you could go out and you could pay your 2-year-old $15,000. There's nothing stopping us from doing that. But it's also opened us for a big liability if someone was to come and look at that. And so really what I'm going to say here is, just kind of be conscious about this. Don't go overboard on it. Make sure we have a defensible position while at the same time maximizing the amount of money that goes into our pocket. Rent. And so the big thing on rent is they came out and they said that we are allowed to pay back rent if we need to, but they do not want us prepaying rent. And so if you missed your April payment and we now got our PPP in May, you're allowed to go back and pay your April payment along with your May and then June rent payment. So that's 100% okay. A lot of people have asked about what about triple net leases? They've came out that says common area maintenance is not an includable allowable deduction. And it looks like property taxes are shaky at best and probably not going to be allowable for a rent deduction. Again, you got to think that non-payroll costs can only make up to 25% of your PPP forgiveness. And so keep in mind when you're trying to get really aggressive with rent and utilities, you might already be capped out depending on how much your rent costs. And then let's kind of get into utilities as the last one here. And so we know what the general basics of utilities are, right? Your electric bill, your water bill, your sewer bill. But one of the things that they did come out and they did give us better guidance on is telephone, cell phone, internet, security. All of those things are allowable utilities expenses. And one of the things that they also did add in as well is gas for your automobile, for your car, for your truck, for your shop vehicles. Gas is going to be an allowable utility deduction. I know for a lot of shop owners out there, the gas expense that you're showing on your financials might not be significant, right? And probably a lot of it isn't really truly related to the shop vehicles. It just happens to get deducted on there. But for those of you out there that drive a significant amount for your business, or you have tow trucks and stuff like that, I mean, that could end up being a pretty monstrous deduction for a lot of people. So something that just kind of came out recently, I mean, officially it's been out since they released these rules, but this has just been within the last week or so that they came out with some better guidance on some of these things. All right. So I can see some good questions coming through here. Yeah, ask these questions. If I don't hit your question here at the end, then just kind of shoot them over again so I can have them all there on screen when I kind of go through all of those. All right, so let's get into the big thing that I guess they dropped on us over the weekend, the new forgiveness application for the SBA. And so this is something that we've been asking about a lot, is what is the forgiveness process going to look like? Are we going to be certifying that we've spent all the money? Is it going to be a simple form? What is it going to be? And they released it to us this weekend. For those of you that have seen it, and I'll have someone post a link in here or follow up on our Facebook page with a link to it so you can see it. It's 11 pages long. Yeah, it's massive. Now, not all of those pages are fillable. There's a ton of instructions on there. But looking at it from an accountant's point of view, I'm saying to myself, wow, this is pretty in-depth. And I'm an accountant. I do this stuff all day. That's really the biggest part here that's kind of disheartening for me, is really this is meant for small businesses, right? This is meant for regular, independently owned businesses to essentially be able to do this stuff themselves. When I look at that application, I don't see very many of my clients being able to do this unassisted. Now, my clients obviously have a resource. They have us to be able to go down through and get the knowledge and expertise on it. But if you're a regular business out there, small business, maybe you're tight on money right now, you probably just don't have the resources yourself to be able to fill this out and fill this out accurately. And so we'll see what they end up coming out with that. I would not be surprised if they came out and started to change that application somewhat. Because it just really doesn't make sense. It's not logical. I feel like that it's overly complicated for no good reason. There's a lot of sections in there that are not applicable to most people, but it's still included in there. And it's not really explicitly clear if it's applicable to you or not. And so I'm not going to get super in-depth on this application right now. What we're actually going to do is we're planning to have a future webinar where we just get into that application. We're going to go down through from page 1 to page 11 and just fill it out, fill it out like I'm going to fill it out for our firm here, and just kind of coming through areas where we have issues or where areas I think that people could kind of get tripped up on. But what I want to do is kind of touch on a couple of things that the application did clarify that was kind of gray areas here in the past. So the first one that we've had a lot of questions about is we've seen that there's going to be limits on how much you can pay someone over the period. And there's been a lot of misinformation about people that make over $100,000. Hey, if I pay someone over $100,000 or over the limit for the 8-week period, it looks like I cannot count them for wages. Not true. you could pay someone $1 million a year if you want to, but we're only going to be able to use $15,385 over this 8-week period. It works out to be $1,923 a week, but it's not going to be tested on a weekly basis. It's going to be tested for the 8-week period. Example of that, let's say that you have someone that is commission-based and they have a monstrous week. They make $5,000 this week, but then for the remaining weeks, they only make $800. It doesn't matter. The 5,000 is not going to be capped out. It's just going to be looked at over the 8-week period. Okay. For owner's salary, it doesn't matter if you are on payroll and if you make over $100,000. I know some people that went and read the forgiveness application a little bit before. They noticed that there was a line in there that says, do not include owner's salary or people that make over $100,000 in Section A. And what they're saying there is they're not saying that we're not going to be able to include those people on there, those employees on there. What they're saying is that they're not going to be listed in the same place that your other employees are. We're still able to deduct owner's pay or owner employees pay. We're still able to deduct people over 100,000. It's just listed at a different place on that application. One of the other things that they gave that actually adds a little bit more confusion to the process is before, when they talked about this, they said that the 8 weeks starts when you get your money, right? So if I get my money today, my 8-week clock starts ticking right now. What they've come out and said is that people that do, it's mostly for people that do a bi-weekly or semi-monthly pay period, you can elect to have an alternative repayment calendar or alternative 8 weeks that more coincides with your regular pay period. And so let's use today as an example. Let's say that I pay every other Friday and I got my loan today and my first paycheck is going to be next Friday. If you do the math on that, you're not going to end up having 4 pay periods in the 8-week period because the 4th one is going to fall outside the window. And so then what the Treasury has come out and said is for people in those situations, you can actually have an alternative repayment schedule, and that will actually start on your first pay date that you elected to. Okay. Now, for most people, this is not going to make any sort of difference for you. Because if you have 8 pay periods, if you're a weekly payer, you're perfectly fine. You're perfectly good to go. If you pay bi-weekly or bi-monthly, as long as you have 4 pay periods in there, you're perfectly fine. But if that's a situation where your pay date's not going to fall in the correct period, it's something that we should probably look into or talk to your account about looking into. All right, we've got a lot of good questions here. So I'm going to try and get through my thing so we can just kind of go down through and answer these questions. The next thing that a lot of people talked about is we need to spend 75% of this money on payroll. But one of the things that I didn't get asked a lot that I was kind of asking to myself is, all right, they're telling us that we have to spend 75% of this on payroll. What happens if we don't spend 75%? As of, before this forgiveness application came out, we didn't know if that meant that the whole thing was not going to be forgivable, if it was going to be a penalty associated with it, what was going to happen. And so what they've came out and said is that 75% of your forgiveness has to be on payroll. And so what they're actually going to do is they're actually going to recalculate your maximum forgiveness based on whatever your payroll is. And so I'll give you an example. Let's say that you got a PPP for $125,000. If you got a PPP for $125,000, rough numbers, you have to spend about $92,000 on payroll or payroll costs. So payroll, 401k, health insurance. Let's say that you spent $75,000 on it, which would be well below the 75%. What they're saying is that if you spent $75,000 on payroll, that needs to be at most 75 or at least 75% of your forgiveness. And so then what they would do is they would say, all right, you spent $75,000. We are going to divide that by 0.75. And then what we're going to do is recalculate your maximum forgiveness. And so your maximum forgiveness would now be $100,000 because that would be 75% payroll accordingly. And so you can see how we had $125,000 before, where if we spent $92,000 on payroll, we'd still be eligible to use the remaining bit on utilities and rent up to the $125,000. However, if we only spend $75,000 on payroll, then our maximum forgiveness is only going to be $100,000 because we have to hit that 75% mark. All right. Last thing I kind of want to get into here about the application. Like I said, I don't want to get too in depth of the application. It's too new. I foresee that we're going to have things that are going to change about it. But the last thing I kind of want to touch on is a question that's been asked a lot, especially with one of the stuff that we're seeing with these unemployment benefits increasing. What happens if I offer a employee their job back and they choose to not come back? What do I do in that situation? Some of you out there might have already been encountering this situation. If you pay someone $15 an hour, rough numbers, they're probably making double right now sitting at home getting an unemployment check than what you were paying them. And so there's no incentive for them to come back. Now, legally, they're not supposed to be getting unemployment benefits if they've been offered their job back. But as you guys can probably see firsthand, I mean, these state unemployment departments are massively overloaded. And so we just really haven't been seeing any sort of policing going on. But if you were to offer a person a job back, and I call them up and I say, hey, Steve, we're ready for you to come back. We're open for business. You're free to come back. And Steve tells me, you know what, Hunt? I'd rather sit at home. I'm getting way more money on unemployment. I'm not coming back. As of before, we need to maintain our head count or go back to what our head count was before this happened as of June 30th. And so January through March 31st, we had 6 employees on the books. And then the coronavirus hit and we dropped down to 4 employees. I need to be back up to 6 or more by June 30th. Now, if you have a situation where you have someone that does not come back and you've done everything that you can to try and offer the job back and you've sent a written job offer to the person and they still decline it, what the Treasury has said is that you would not be penalized for that person. And so let's say that you had 6 people, you laid 2 of them off, you offered both of them their job back, one of them accepted it, and the other one said, I'm not coming back, I'm going to stay on unemployment. If you have written documentation that you submitted that offer to the person and they declined it, then you're not going to be penalized. Even though you went from 6 employees down to 5 employees, you're not going to be penalized because you essentially did everything in your power to give them their job back. That was pretty good to see because I think that that's going to be an issue that a lot of people are going to come into here. For those of you that are kind of early in the PPP stages, you probably have already come across that issue. And, depending on what industry you're in, it's probably very, very common. Now, for a shop, I would say most people in a shop are making above what you'd be making on unemployment. But there's a ton of industries out there where you're getting way more money on unemployment than you ever made at your job. And so the incentive is kind of gone there for people to go back to work because they're getting paid more money staying at home. Now, that provision of the extra $600 is set to expire at the end of July. There's been a lot of talk about them trying to extend that to the end of the year. I really, really hope that that's not the case. Hey, I'm all for taking care of people when they're in a bad position. Hey, if you've lost your job, the economy's down. Hey, you know what? We're here to take care of each other, and to do the right thing. My biggest thing is that no one should ever be making more in unemployment than what they're making at their job, point blank, right? If you were making $600 a week and you've been making $600 a week for the last year, there's no reason that you deserve to get $1,000 a week. There's just no argument for that. And so, that's just one thing we got to keep an eye on. Hopefully they'll do the right thing. Hey, I know this is weird times right now. Give people money for a couple months. But, I think that most people are thinking, hey, I'm not going to be able to ride this out for a long time. It expires the end of July. I'm going to have to go back and look for my job. And that's already pushing people back into the market now because they don't want to lose that job when, the unemployment benefits do stop. However, if they expand that and they extend it to the end of the year, there's going to be a ton of people that just say, hey, I'm going to ride this out. I'm going to ride this out for another 7 months and cash my checks and stay at home. So we'll kind of keep our eye on that. Last thing on this one is a lot of people were asking, when we did this PPP application, there was not a whole lot of guidance on how you were calculating how many jobs you had, right? How many employees you had, whatever you listed on your application. And I've talked to a ton of shops that have came back and they said, hey, Hunt, I didn't know that I wasn't supposed to count part-time employees. I put 15 on there. I really only have 12. Am I going to be penalized when I do the forgiveness because I obviously am not going to have 15 because I miscalculated it before? And so by looking at the forgiveness application, they are not making us go off of what we put on our initial application. They're allowing us to recalculate our beginning and our ending full-time equivalent employees. And so if you are in that situation where you put 15, you really had 12, when we do the forgiveness application, we're going to be putting 12 on there for beginning, and then we'll be able to calculate again for ending FTEs. And so that eliminates a lot of headaches for people, kind of in that situation. There's a number of other situations out there that they haven't given good guidance on the FTEs. What happens if you have someone that moves away? What happens if you have someone that retires? What happens if you have a position that's just no longer, feasible, kind of in the current climate of what we have going on? As of right now, there's no exemptions for that. The only exemptions for FTEs right now, or the lack thereof, is going to be a situation like I talked about. You offered the person their job back. They chose to decline the job offer. All right. Awesome. So real quick, I want to talk about the EIDL loans because that's been something that we've been seeing more and more of, and I've been getting this question a lot. And so for those of you that got the EIDL loan, not the grant portion, the loan portion, before they were giving out up to $500,000, $500,000, a ton of money. We had a handful of shops that got this. Not many got that. What they've done is they've lowered the maximum amount down to $150,000, which is still a lot of money. Not as much as $500,000, obviously, but still a lot of money. First and foremost, this is a loan. It's not a grant. It's not forgiven. It is a true loan. Now, that being said, is a very, very cheap loan. It's 30 years at 3.75% interest with no payments due for a year. Okay. So already people's wheels are turning, because I have already had shops call me up and they say, hey, Hunt, I have another long-term liability out there that's 6%. It's a no-brainer. I'm going to take this money. I'm going to turn around and I'm going to pay down my loan. That's where you have to be very careful here, because the loan documents are extremely vague, but there's essentially 2 sentences in there on how they want us to use that money. They wanted to use that money on current operating expenses to maintain the business that you have. They don't want you paying down old debt. They don't want you refining debt with it. They want you to use it for ongoing operations, ongoing operating expenses. And so when you get this, be very clear about what you need to use this on, right? If you, let's say that you've ran up a credit card bill because of, what's been going on with coronavirus and the shutdown, that's going to be allowable to pay down that. Now, if you have a $100,000 line of credit that's been there and been capped out for 3 years, really not going to be allowable expense to use that on. That being said, even with all the stipulations that they're putting on these disaster loans, I still think for most businesses, it's a pretty good deal. Like we've been talking about all along, cash is king, right? We need to have cash to be able to get by. And so if it's a 3.75% interest rate, you've got the full $150,000, you're not going to have to make any payments on that for a year, but at the same time, it is going to be accruing interest. So we got to be mindful of that. But if you were to keep that money in your account, let's say that you got that money, you put into a savings account, it's going to cost you about, rough numbers, $500 a month in interest. If you already have $500,000 in your bank, you don't owe anyone anything, then hey, maybe this is not for you and it's not worth spending your money on this interest. Now, if you're sitting there and you're thinking, hey, I got $10,000 in my bank, you probably need to think about taking this money and just letting it sit there. Because just like we were talking about before with, keeping some of this PPP money set aside, what happens if we get shut down again? What happens if we go through the summer? Hey, we have a booming summer. Everything is going back to normal. People are still, being sick. We start to see the numbers rising again. And they come back in the fall and they say, hey, you know what? We're done. We did the social distancing before. We did, the shutdown. We left the essential businesses open. What happens if they come back and do this again, or maybe come back and do it even worse? And they say, hey, you know what? We didn't go as extreme as enough that time. We're shutting it down, and we're really shutting it down this time. Personally, I don't think that there's going to be as many government programs as there was for this initial go around. Realistically, we just don't have the money as a country to be giving out more and more money. And so, if this is to get shut down and we go to kind of wave 2 of this shutdown, I don't think the PPP program will be around. I don't think that a lot of the grant programs will be around. More or less, we're probably going to be left to our own devices, and we're going to have to fight for ourselves. We're not going to be able to do anything if we don't have cash. And so if it's me personally for my business, I'm going to take that $150,000. I'm going to pay that interest to just have it sitting there, because that's going to allow me to sleep at night. Because I know if I go down and we come into November and I get shut down again, I have $150,000 in the bank. Yeah, I'm paying interest on it, but you know what? It's there. I'm going to be able to use it. I'm going to be able to spend it. We're going to be able to get through this. Let's say that we get to the winter time and we have a much better forecast of things and we think that it's truly behind us. Maybe there's a vaccine, maybe there's a cure. Who knows what's going on? And I don't need that money anymore. Then fine, there's no prepayment penalties on this. You could still keep it for, another 6 months and not pay any tax on it or pay any interest on it. But you could also just turn around and say, hey, you know what, SBA, I don't want this money anymore. Here it is. Take it back. I'm over. I'm done with it. All right. So that is kind of all that I have. I'm just going to kind of start going down through here and answer some questions as best that I can. Let's start with the easy ones here. What if you turn in more than 75% for payroll? Perfectly fine. We need to spend 75% or more on payroll. I have several shops out there that have, hired people between last year and this year, and they're going to use 100% of the PPP money on payroll. For forgiveness perspective, it makes your life a lot easier. I don't have to give them canceled check for rent. I don't have to give them canceled check or leases or copies of leases for my rent. I just give my payroll and I'm done. So 100% okay there. All right, let's see here. Hey, Sandy, what if an employee resigned? Like I was talking about, there is no caveats for people other than you offer them their job back and they chose not to come back. Resigned employees still, as of right now, still count just like anyone else. You've technically reduced the amount of employees that you have. Something that I would definitely keep an eye on because that could change. But as of right now, it's going to be looked at just like you let that person go, unfortunately. All right, let's see here. Terry, I was going to pick you. I had to scroll up here to get you. Can an employer's 401k contribution be considered part of payroll? Yes, it can, right? And so payroll expenses are really going to be made up of four things. They're going to be made up of gross wages. They're going to be made up of state unemployment, which at this point is going to probably be pretty low because most people are probably capped out. It's going to be made up of the employer portion of retirement, whether that's a simple IRA or 401k. And it's going to be made up of employer's portion of health insurance, what the employer pays, not what the employee pays. Good question there. Ginger, can we use temp employees that we pay through an outside agency? So yes, if you use temp employees or if you use a PEO, you're able to use those as employees for all intents and purposes. So that's perfectly fine. Aaron, I had 3 employees before PPP. 1 employee can't come back for a month. Will that be used against me? Should I be paying the 2 employees out of the PPP now? And so, yes, if you have your PPP money, then you need to be paying all of your employees. As long as that 3rd employee comes back before June 30th, you're good to go. You'll essentially be treated like that you had 3 employees for the entire period. All right. All right, Sharon, a question that a lot of people have. I mean, tons of shops are family-owned businesses. There's a lot of spouses that work in the business that don't necessarily get paid because for most purposes, it doesn't make sense for 2 people to cash W-2s. We're paying too much in payroll taxes. But her question is, her hubby is on W-2. You're just taking an owner's draw and you're very part-time, and the CPA said it made more sense for you to not take a W-2. 100% makes sense for everything other than what we're going through right now. If you're working in the business, you should be getting a paycheck right now so we can use that money going towards forgiveness. Is it going to be hard to justify if you go from $0 to $1,900 a week? Maybe. Realistically, no one's going to probably look into that. Use your own discretion on what you actually do in your business. But yes, get yourself onto payroll. Deb, we changed our pay period to weekly for these 8 weeks. Is this okay? 100% okay. And it's what a lot of people chose to do because it made it easier for tracking, especially people that were semi-monthly or something like that. They said, hey, you know what? For these 8 weeks, you guys are just going to get paid for the 8-week period. You're good to go. For those, before the questions kind of get asked about that, one thing I wanted to clarify on this is the payroll goes by pay date, not by pay period. And so if I'm paying the pay date in the 8-week period, it's good, even if that was accrued for before or after. Good questions here. If the owner is on owner's draw, I didn't include him as part of the PPP, can I still pay him? Kind of a tricky question because the short answer is it depends, right? And so we really have 3 different situations here that I'll go into. The first one, if you're a sole proprietor, you are not allowed to take payroll. You only take owner's draw. And what they do for sole proprietors is they will take how much money you showed or how much income you showed on last year's Schedule C. They will divide that by 52, and that comes up with your weekly pay for this forgiveness period. And so let's just do, for simple math's sake, that you made $52,000 on your Schedule C for last year. For forgiveness purposes and PPP purposes, your pay for the 8-week period is going to be $1,000 a week, right? 52,000 divided by 52. And so you're going to get $8,000 of forgiveness over the next 8 weeks. Whether you take out $40,000 in draws or whether you take out no money in draws, it's going to be set at that $8,000. That's going to be the same exact case for a partnership. Instead of taking your Schedule C, you're going to take whatever money you showed on your partnership K1, again, divide that by 52, and that is going to be your quote unquote pay for this 8-week period. So if you have the same amount of people, or if you're taking the same amount of money out, there's no change on it. Now Reed's coming in to interrupt me.
Keep talking.
He's giving me highlighted stuff here to try and read live on air. You know I can't read something this small.
Just go ahead and keep going.
So if we're on partnership, it's going to be the same thing as a Schedule C, right? And so whatever you made last year divided by 52, that's going to be your pay for the 8-week period. If you're a partnership, again, you cannot go on W-2, you cannot go on payroll, just like you can if you're a sole proprietor. Now, to get into your question here, if you are an S corporation or a C corporation and you are on payroll, owner's draw is not included. If you weren't taking out any payroll before, but you're allowed to, you need to be taking out payroll instead of an owner's draw, because owner's draw is not a forgivable or a covered expense. Good question. Let's see. 2 questions. If we don't spend a 75% on payroll, any remaining will still be at the 1% if you decide to keep it. Correct, Barb. So if we're not at the 75%, it's obviously going to lower down our max forgiveness amount, but it's still going to be the same rules apply. If you have money left over at the end of it, it's going to be turned into a 1% loan repaid over 18 months. Hey, Gary, does employer paid healthcare premiums count towards the 75% payroll expense? Yes, sir, it does, right? Payroll, health insurance, and retirement benefits. Amy here, if we replace an employee that is collecting unemployment and most likely don't plan to come back, do we report to unemployment, allow that person to ride out their unemployment? Really what you want to do here, it's you have no legal requirement to notify unemployment. That's not your problem. That's between the employee and the unemployment office. What I've been telling my clients is if you really have a bone to pick, then sure, can you call up and report the person? Yeah, go ahead, do so. Do you have a legal obligation to do that? No. What your legal obligation is, though, is to be honest if unemployment does contact you. Depending on what state you're in, some are better than others. A lot of times they might call up and they say, hey, Amy, Joe Smith is collecting unemployment off of you. What were the terms of his dismissal? And have you offered him his job back? I'd answer that open and honestly. Realistically, I wouldn't be going out of my way to report anyone to unemployment because it's just not worth my time, right? I don't want to be sitting on the phone. I don't want to be dealing with governmental agencies. I don't want to be dealing with the state. Answer whatever they ask you. Honestly, I wouldn't go out of my way to report anyone. That's really on them. They'll be reporting it every single week, and they're going to be lying to unemployment if they did get their job offered back to them. All right. Paul, so asking here, if we have offered a job back and the employee has a compromised immune system, is frightened due to work, how will this be viewed in forgiveness? A situation that comes up a lot, right? Hey, I just don't feel comfortable coming back. As far, as forgiveness rules, it's not an eligible expense to just be afraid of getting sick, unfortunately. Now, in your situation, I would kind of be looking at it as the same situation as offering someone back and them just flat out refusing. And so for that person, if you've offered them their job back and they still choose to stay at home, I'm going to give them a written offer to, that formalizes the offer that I'm going to give them for them to come back for employment. And if I get them coming back that they're declining that, then I would say that falls in the same situation as someone that's refusing to come back. Hey, I did everything in my power to offer this person their job back, and they chose to not do so. Whether it was a legitimate reason or not legitimate reason, make sure we have that thing documented. Good question. Rachel, when I applied, I thought I would be hiring a seventh employee. We however did not. We had 7 before COVID and let one go due to other issues. I've added my son to payroll and I'm paying him for modeling and our advertising, and he is not full time. Can you count him as my seventh employee? And so while he might be your seventh employee, he is not going to be your seventh full-time employee, right? So what they're going to do is they're going to take 40 hours and they're going to measure how many full-time equivalent employees that you have. So your son would not count towards that. Love your creativeness there and like to kind of see you guys get into the gray areas, but that will not count for FTEs. Here we got another question here. Oh, you got a long one. Come on now. Trying to clarify a disconnect between owner and employee. The employee makes a base plus bonus over a certain amount every month. Does it matter if it's considered a monthly bonus or commission? Last year's earnings included base and bonus was 110,000, base being 42,000. How would PPP be calculated? And so for what we've been reading on there, there's no designation between how an employee is paid. What they're going to say, and they're going to take a look at how much the person made in total to measure if you're paying them enough. Now, the only tricky thing here, and I think it deals with your situation as well, is while most people calculated their PPP off of last year, calendar 2019, for the 75% look back, that's actually going to be comparing what you're paying them during this 8-week period to January through March of this year. And if you're in a seasonal business where the commission and the bonuses just wasn't that high, it might be a very low number for January through March. So just something to kind of keep in mind. If you have more questions, you know how to reach me. Gary, I was offered 150,000 and we chose to only take 100,000. I'm guessing it has to do with the EIDL loan. The question mark, I'm not sure what your question is there. I'm not sure if you're looking to get my blessings on that, if that's the right thing to do or not. But yeah, I mean, there's a lot of people that have chosen to do that. You know, I was talking to another client yesterday. They took the full $500,000 just because they said, hey, I'm going to take it and see what I need to do with it. But once we've talked it through, we feel like it's probably excessive for them to have that much and pay that much in interest. And so if you've kind of looked at your numbers in your business and you say, hey, you know what? I don't really need 150, I need 100, then fine, perfectly good. You know, we're going to save some money on interest. Not a bad idea at all. All right, Laura, do they base current payroll during the 8-week on an average of 19? Can I pay myself more than I earned last year? So kind of got two questions in there. The first one is they're not comparing it to 2019, they're comparing it to January through March of 2020 when doing that 75%. If you're, paying someone less than 75% of what they were making before. Can you pay yourself more money than you earned last year? Sure, you can do whatever you want to do. Obviously, if someone's to look into it, we have to have substantiated reason why that makes sense. Like I said before, very low chance that someone would really ever look into that, but we want to make sure we have a defensible position there. Oh, it just jumped around on me here. Hang on. Hang on, guys. We're getting questions coming down through here. I have one employee at home with kids. I'm planning to pay her regular salary with PPP money. Is that okay? Perfectly okay. I think it's a really nice thing to do. It's a really good gesture. Been seeing a ton of people doing stuff like that. Hey, throw the legal obligation out the window. I don't care what I legally have to do. I'm doing what I think is best for me and my staff. I think people that choose to do that are going to reap the dividends down the road, with a really good core, really good culture that sticks by you because you've done what you felt was right and what you thought was right for them and their family. So 100% allowed and perfect to do. Jared, can we include 1099 contract labor? You cannot. So if you had a 1099 employee and maybe you lucked out and got them included on your PPP application, they've changed the rules. 1099 contractors are no longer allowable as a forgivable expense. So if you have someone that's 1099 contractor, I'd probably look at them getting them on payroll if they're going to be a long-term solution for you. Probably should be on payroll anyways. All right, I'm going to try and skip through here to get as many people answered as I can. If I don't use the entire PPP and the balance becomes a loan, do I still have to use the loan for payroll and utilities, and will there be additional paperwork to report? As far as we know right now, Lexi, once you don't get that money forgiven, it is now a loan. You can essentially choose to do with it as you wish, okay? Chris, I noticed on the new forgiveness rule that transportation is under covered utilities. What is considered transportation auto repair shop? Good question, right? And that's one thing we're asking ourselves. And so transportation, one of the things that we have kind of got official guidance on it is that they're going to allow us to use gas or fuel for the vehicles. What we don't know is that they're going to allow us to use repairs, maintenance, insurance, and all of that stuff related to those vehicles. So as of right now, we know for sure gas. The other ones are kind of a gray area. For most people, if you don't do tow trucks, it's not going to probably be a significant game changer here. But if you're kind of on the threshold and you could use it, it's something that I'd probably be looking into to make sure that we can maximize that as much as possible. Mark, I almost missed you here. We drained our line of credit. I'm not sure why you're screaming at me in all caps, but I'll still answer it. We drained our line of credit here and put it into savings just in case. The bank pulled it. So the bank pulled your line of credit or pulled the money back out. I guess either way, can the EIDL work if we put that back into the line of credit and keep the EIDL working? Kind of, I think I know what you're saying here. And you can call me later if I didn't clarify this. So you took your money out of your line of credit. So let's say that you took $150,000 out of your line of credit. Now that's sitting in your savings account. You're asking if you can use the idle money to repay your line of credit. In essence, really what we'd want to do is we would want to say, all right, I have this $150,000 from my line of credit. I'm going to pay my line of credit back. So I have availability on there. And now I'm going to take my idle loan and I'm going to have the idle money sitting in my savings account. If that's what you're talking about, then yeah, I love that idea because it's probably cheaper to have the idle money sitting there than what your line of credit is charging you for interest. So hopefully that answered you there. Lisa, if we want to give a bonus to employees for sticking it out with us, can we also use this and also bonus to owners? Reed, do you want to get on here? Gotcha. And so one of the things that he's mentioning here is that he kind of came down through. And so owner's pay is going to be capped at what your 2019 compensation is. Now, one of the things that we don't know about that is obviously 2019 was an entire 52-week period. We're looking at an 8-week period here. So we don't know exactly how they're going to do on that. But going back to your question, if we want to give a bonus for employees for sticking it out with us, can you do this? Yes, 100% allowed to give out bonuses. Now, obviously, we got to substantiate if they can see why you're giving bonuses out to people. I don't see any sort of scrutiny put on employees. If it's an owner or family member, obviously there could be some more scrutiny put on there, because of relationships. Kate, 100% cap on salary. Is that based on gross wages or does that include health and retirement contributions? $100,000 cap is just for payroll. Benefits, health insurance, and 401k are over and above that. So let's say that you paid $20,000 in health insurance to an employee and they make $100,000. $120,000 is the allowable expense, over a yearly basis. It's not hard capped at 100. That's just for wages. Good question, though. Danny, if a location has 14 full-time employees and 6 part-time employees that have 20 to 25 hours, does that mean you have 14 FTEs or 17? It means you have 17 because it's not full-time employees, it's full-time equivalents. So essentially what you would do is you would add up the amount of hours that they work divided by 40, and that would give the amount of FTEs. And so if you had 6 about working half-time, that would work out to be 3 full-timers. Hey, Frank. I have replaced employees that did not want to come back. Does this count as total number employed? Yep. Don't have to get the same people back. If you have someone that doesn't want to come back, don't want them back for any reason, you can replace them as you wish. Is the PPP taxable income if you return it? No. If you don't use any money, you give all the money back, then you have no net effect on that, right? None of that money was forgiven, which means that that's not taxable. And since none of the money was forgiven, that means that all of our expenses are still deductible. So 100% good. With 401k and company match, are we allowed to claim additional matching funds? And so I'm not sure if you're talking about funding like a cash balance profit sharing plan mid-year. I'm not sure if you're talking about maybe increasing the match for it. It's kind of a tricky situation. As far as, the match for most people is going to be whatever you accrue over the 8-week period, right? So if your match is going to be 3%, it's whatever you accrue over that 8-week period. Now, if you have a match that is still owed from maybe the first quarter on it, it seems to be kind of a gray area if we're going to be allowed to deduct that expense. I would probably say let's go ahead and try to deduct it. If they end up throwing it back out, then so be it. But I would say that it's still an allowable expense, and without guidance to say that we can't do it, we're going to choose to do it. For those of clients out there that we have that have a 401k that fund a ton of money into profit sharing, we are doing some contributions in this covered period so that we can use those against forgiveness. Mitch, Mary and I both receive paychecks, but no vacation pay. Can we receive vacation pay and use it towards forgiveness? So yes, vacation pay counts towards forgiveness. So if you want to take vacation pay, if you want to take bonus pay, whatever you want to do, it all goes into the same bucket. I've heard of a lot of clients that are paying out vacation pay for people that maybe have too much used up, or maybe people that don't use it during this 8-week period. Vacation pay is looked at just like salary, so you're good to go. If we are an S Corp taking a paycheck, are we able to take commission as in what we should have paid a service advisor, since we are now a service advisor too? I like it. I think there's a reasonable defense there, and I think that you have a defensible position. 100% good to go on that. Hey, Tina, if I didn't include my 401k on application, can I still use it with a PPP? Yeah, just because you didn't calculate it right the first time doesn't mean it's changing the rules for you on the forgiveness side of it. Plenty of people did the application wrong, right? Because, some people were doing it without good guidance. If you did it early on, some people just were doing their best on it. So if you want to do, if you want to include your 401k match on the forgiveness stuff, you're perfectly good to go. Joe, one of my companies has no work to do, so we paid off most of the employees. How or will I be penalized? So essentially, I don't see you being penalized, but it's just not going to be forgiven. So you're going to have a pretty big PPP loan left over at the end if you chose to take it. Will they come back and they say, hey, you took the funds and you didn't bring anyone back? I can't see that being the case. Now, I have seen some news stories about people that have abused this. I think it was some reality TV star that I'd never heard of. He got like $1.5 million for his business, and he went and bought cars and boats and jet skis and stuff like that. And I think that they're actually pressing criminal charges on him. Now, for you in your situation where you took the PPP and then you didn't actually open up the business or pay employees, I would say that the worst case scenario, what they would say to you, Joe, is, well, then you need to give us our money back. We're not even going to turn this into a loan. You just didn't even try to use it. Just give it back. Best case scenario, they say, well, Joe, you didn't use any of it, so it's not forgiven. You just owe it back to us over 18 months at 1% interest. Oh, now it's skipping through here. Patrick, Uber. I'm guessing that you're talking about transportation. I think Uber is a little bit of a gray area, but you know what? It might be allowable. If we need to use that last little bit, I'd probably try and consider it, because as far as I'm concerned, that's a transportation, right? So I think we have a good position there. Hey, Jenny, do you have any concerns with the personal guarantee associated with the EIDL? Will it cause issues for us if we want to refinance, sell, or buy other property? I can't say that it won't cause any issues. It really depends on how you want to look at this. So if you look at it from the standpoint of if I have $150,000 out there and I still have the money in my bank account, if it does raise any issues, then no harm, no foul. I'll just pay you back your $150,000, and that's kind of out the window. Now, if you do have money out there on the street, then it's going to be looked at just like any other loan would. Hey, you borrowed $150,000. We need to make sure the collateral, goes along with it. And so, best case scenario, it makes no difference. We didn't need the money, but worst case scenario, we had to use the money. And so, the ramifications of that are just like anything else would be. So I wouldn't be overly concerned about that. That's kind of a short answer on that one. Rod, if you already got the PPP, can I still apply and get the EIDL loan? Does it affect the PPP? So yeah, if you want to go out and get the loan, it does not affect your PPP whatsoever. It's a loan, completely a loan, pay back just like any normal loan. Don't want to be using it for the same expenses that you're using for PPP forgiveness, but they don't really affect each other. We've always paid the gas for our employees. We'll be able to use that as transportation costs. I don't see why you could not, right? They said we can use it for transportation costs and gas. I don't see why it would make any difference if it was for shop vehicles or employee vehicles. Rick, give you a shout out just for thanking me. Thank you, Rick, for joining us. Hopefully this has been helpful for people. The amount of feedback that I've gotten for this, just saying thank you, it's really, makes doing stuff like this very worthwhile to do. Melinda, how do we get the PPP forgiveness forms you mentioned below? I think someone put a link here on this chat. If not, we'll post it on our Facebook page, and then you have my email. Just shoot me an email, and I'll give you the forgiveness forms as well. If you really want some good reading for today, I'd be happy to give that to you. Alejandro, Wells Fargo funded me $10,000 less than the contract amount. Nobody gives me an answer. What should I do at this point? I'm guessing the $10,000, if it was an even $10,000 amount, I'm guessing that they were reducing that because of the EIDL grant money. It's not the proper thing to do. If you can get a hold of someone in Wells Fargo, they can actually resubmit to SBA to give you that difference. You've been through the process with Wells Fargo enough to know that we have probably a slim to none chance of that happening. But that's really the only official channel to do, is to get Wells Fargo to resubmit for that, underfunding amount. Camille, can I replace 2 part-time hourly employees who are afraid to come back with 1 full-time? Correct. Yep. So if we have 2 people working 20 hours, we can replace them with 1 person working 40 hours. All right. So I'm going to try to knock out a couple of these. We're going over the hour mark, so I'm going to try to do a handful more of these. Tim, so I'm going to go rapid fire here. So if transportation is included, would the payment on company vehicle be included? How can we verify if insurance costs would be allowed? So I don't think that the payment for the vehicle would be included. I don't think depreciation of the vehicle would be included. How can we verify insurance costs will be allowed? Hopefully they're going to come out with some better guidance on that. Really, the transportation item only came out within a couple of weeks, so we would be able to have to see what they're going to allow us to do. Without better guidance coming, then it depends on what stance you want to take. Personally, I'd probably take the more aggressive stance and saying, hey, if you're allowing me to do transportation, I'm going to include insurance. I'm going to include gas on this thing. I just don't think that we'll be able to include the actual payment for the vehicle itself. President of a C corporation received a W-2 last year. You are an owner employee, and you're 100% eligible to take out a W-2. Yep, you're good to go. All right, a couple more here. It keeps on redoing this. Do we have to pay people out for lack of childcare, the 75% because we have the PPP, or can we continue to pay them the 2/3? And so what essentially happens is, if you're going to use them with the PPP money, you have to file by the PPP rules, which is the 75%. If you're using them under the FMLA, you have to go by the FMLA rules, which is the 2/3. And so it depends on what you're doing. If you're using the FMLA funds in getting the FMLA credit, then that actually doesn't go towards your PPP. If you're not going to do the FMLA credit and you're going to do them through PPP, you need to do the PPP rulings. Had employees that stayed on during January through March and did not get paychecks or collect unemployment, can I pay them back or use towards the 75%? Yeah, if you have someone that you didn't pay, or you shorted them, or they got paid less money for whatever reason, you're able to catch that up and pay them more during that covered period. Just can't go over that $15,385 mark. Gina, is the $10,000 EIDL grant money subtracted from the forgivable portion of the PPP? By all the laws and all the stuff that have came out, yes, it is. However, it's not explicitly clear on the forgiveness application. On a forgiveness application, it makes us tell them how much we got and what our application number was, but it doesn't actually subtract out of the forgiveness amount. So we'll have to see what they do to update that. But from everything that we knew before that forgiveness application came out, yes. If you got $110,000 through the PPP and you got $10,000 through the grant, it's going to reduce your forgiveness for the PPP from 110 down to 100. Now you still have the 10,000 grant, so you still have 110,000 of free money, but yes, it's going to lower down the forgiveness. I'm just going to pat myself on the back. A lot of thank yous here. Thanks for the guys. Thank you guys out there, and Denny's. Awesome. Thank you. We've got a lot of thank you here. Where are the questions? Michael, what is the 15,380 mark? And so I've been rattling off that number, and I'm not just making up a random number here. And so it's $15,385 is the cap that we're talking about for the 8-week period. The way that I got that number is it's $100,000 a year divided by 52, right? And so if we do $100,000 a year divided by 52, that gets our weekly rate of $1,923. We multiply it times 8, and that gives us our $15,000 cap. Jackie, is employee share of PA and federal unemployment forgivable? Your share of Pennsylvania unemployment is. Federal is not going to be. Honestly, you're probably paying 0 federal unemployment right now. All right, a couple more questions here, and then we're going to sign off for the day. All right, Michael, we received $2,000 grant for our LLC, but have no employees and no PPE. What do we have to do, or what can we do? You applied for the EIDL a long time ago, but never got anything outside of the grant money. So really, there's nothing that you got to do for your LLC if you got $2,000. Spend it on what you want to do, what you want to spend it on. There's really no sort of reporting requirements for that. As far as getting the loan, I'd keep an eye out. What ends up happening is you apply for the grant, you're also applying for the real loan itself. What they'll do is they'll actually shoot you an email and say, hey, Michael, you've been approved for a loan. Click here to see how much and how to apply for it. Take a look at your junk mail. Make sure that you are sorting through it. Anything that's coming from SBA.gov is not going to spam, not going to junk. I've had a ton of people have these things go into junk, so I'd go check that right now. If you have your confirmation number, you can call up the SBA. They're extremely unhelpful. It's extremely long wait times, depending on when you call, but that's really the only other way to kind of keep track and see where it goes. What about loaner vehicle expenses? Yeah. You got loaner cars, shop vehicles, anything that's running through the business as a transportation expense is going to count. All right, this is going to be our last question here. We're going to sign off. Anna, we're going to finish with you. My PPP ends in 2 weeks. How long do I have to apply for the forgiveness loan? Should I wait and see if the application changes? Your PPP ends in 2 weeks. And so on the application, we don't know exactly when the banks are going to even start accepting these or when they're going to put a due date on it. Essentially, if you think about it, though, the natural timeline on this thing is going to be we have 8 weeks to spend this money. That clock starts ticking as soon as we get that money in it. Another clock starts ticking as soon as we get that money as well, which is the 6 months where we don't have to make any payments on this loan. And so the natural idea here is that we need to get our forgiveness application to the bank sometime between after 8 weeks of funding date and 6 months of funding date, so that we make sure that that doesn't get converted into a loan if it's not going to be forgiven, right? I would probably hold off on doing that right now, and I'd probably be talking to my bank to make sure that they're ready to handle these things, to make sure that they're ready for it, and to make sure that we're doing our final forgiveness one. So yeah, I wouldn't be jumping overjoyed to do that forgiveness application just yet. Be taking a look at it to kind of see if there's anything that we weren't thinking about. But yeah, for all intents and purposes right now, I don't think there's a huge rush on doing that. Like I said, I think, before your PPP ends in 2 weeks, we should have some better guidance, and I should be having that other webinar to go through all of this stuff. And obviously I'll keep you posted no matter what. Cool. Awesome. Well, I just want to thank you all for joining me again. Hopefully this was useful information for you. Hopefully I answered most of your questions. I tried to do the best that I can. But yeah, keep an eye out, follow us on Facebook, make sure that you're keeping an eye out for when we announce that next webinar on the forgiveness application. And yeah, be safe, and I will talk to you guys soon. Thank you.